In your opinion, would you buy a home when interest rates is over, when interest rates is over 10%? Or would you feel like, even though you're getting a massive discount, you're paying more every month, would you consider that, or you just wait until interest rates go down?
So I look at home buying very differently than the majority of people. I look at buying a home the way I buy a shirt. For me, a home is not an asset, it's a liability. So what does that mean? I want to buy a home because I want to create memories.
Yes.
I want to buy an investment property or an investment because I want to make money. So if you're buying a home because you think, oh, I want to get rich because of my home, I think you're looking at it the wrong way. Because you should be looking at your home as, I want to make memories here, I want to live here, and I want to grow my family here, and I want to spend time here. If that's the reason why you want to buy a home, what you should be paying attention to is not what's going on in the markets, not what's going on with interest rates, but instead what you should do is say, can I afford it?
Right.
And what does that mean? Can I afford the down payment? Can I afford the monthly payment?
The property taxes.
Can I afford the property tax?
The fix-ups.
The fix-ups. The move-in costs. And then, you move in, like I need the furniture, the upgrades, all that.
Man.
So if you can afford it, then you buy. If you can't afford it, if you're stretching yourself too thin, you don't buy. Because what happens to so many people is you get sucked into trying to time the market. But again, if interest rates drop and you own a home, you can refinance.
Right.
And so remember, it's understanding.
So it's almost good to buy it when interest rates are high if you can get the house on discount. And then if in a year or two the interest rates drop in half, you can refinance.
Just make sure you can afford it. That's the biggest thing. You have to be able to afford it, because if you are stretching yourself too thin, going paycheck to paycheck to live in a home, you're hurting yourself, because now what you're doing, you don't have the ability to invest in other places. You cannot invest your money.
Do you think people will be able to actually buy a home in 5 to 7 years?
It depends on what the Fed does. If the Fed cuts interest rates when we go into a recession, so our economy slows down, the Fed starts cutting interest rates, mortgage rates go back down, you're going to see a bigger flood of cash into the housing market, and that will create a bigger wealth gap, and it will make it significantly more difficult for the regular person to buy a home. Home ownership will become a real American nightmare, because it will be so difficult for the regular person. We will turn into essentially a renter nation.
Wow.
Where homes are owned not even by regular investors,
by corporations.
Corporations.
Yeah.
They've been buying up. I was reading
Blackstone's been buying up a ton of homes,
right?
Yeah,
BlackRock's buying
BlackRock or Blackstone?
They're buying 1 out of every 4 homes in certain neighborhoods.
That's crazy, man.
Yeah, and so
which means they believe people aren't going to be able to afford them, and they're going to have to rent from them.
Yes, and so it's a crazy times to understand that, which is why, again, I look at the home like a liability. Can you afford it? Yes, then buy. If not, then don't stretch yourself too thin. I used to be a real estate salesperson. And the reason why this is so important is because when I was a salesperson, what they say is, you want to tell people this is their biggest investment of their life. So buy a home that you love. Now, again, real estate agents are not bad people. Bankers are not necessarily bad people. However, you have to understand the messaging. If I tell you this is the biggest investment of your life, what are you going to say? I want something bigger. I'm willing to stretch a little bit thinner. Yeah. I'm willing to go a little bit further because I want that home. And so what does that do? Well, it makes the banker richer. It makes the real estate agent a bigger commission check, and they walk away. And now you have to deal with it. If you can afford it, great. But if you start to struggle with it, you're the one that has to deal with the problem by yourself. And so what happens for so many people is your home is a money pit until you sell it. And then you have to hope that you sell it for a profit. Because there's no guarantee, right? We don't know where home prices are going to be in 5 years or 10 years. I can't predict that. I don't know what the Fed is going to do. And so the main thing that you have to understand if you're thinking about buying a home is ignore the markets. Ignore what's going on in the world. Can you afford it today? And please do me a favor, okay? I very rarely try to tell people what to do, because I feel like, I want you to be educated so you can make smart decisions for yourself. But the one time that I really tried to give people, I say, don't do this, is when it comes to adjustable rate mortgages, because they've been making a huge comeback now. Because now the interest rates are 5.5%, people say, I missed out on the opportunity to get a low mortgage. And now I have been seeing a huge growth of adjustable rate mortgages, because now banks will say, don't pay 5.5% on a home, pay 3.7% today, and it's a 5-1 arm. Meaning, after 5 years, it's going to readjust. And then your mortgage payments will readjust. And if it goes higher, don't worry, you can just refinance out. And it is so risky because we don't know where interest rates are going to be. If they go up, and they go up significantly, And now you're like, oh my God, let's just say mortgage rates are 10%. I don't want to pay 3 times more for my mortgage from $800 a month to $2,400 a month. I can't afford that, so let me refinance. Well, if you do that and home prices have dropped and you can't refinance because the bank says, well, you don't have enough equity in the home, I'm not going to refinance you. And then you can't sell because you're underwater. Well, now you're in a tough situation. So pay a little bit more, get that fixed rate mortgage, because if mortgage rates do drop, refinance.
Right.
And lock it in, because other countries in the world don't always even have the option to do a 30-year fixed.
Right.
We do. But an ARM, an adjustable rate mortgage, is significantly more risky. The only time that I would say an ARM is okay is if you are like 100% confident that you're going to be able to pay off the home during that initial teaser rate. Because if you cannot, then you are taking on a huge gamble with the home that you live in, with your family's livelihood. It's one thing if you do it with an investment, but with the home that you live in, avoid that extra risk and just lock in the rate, please.
Right. I'm curious. Here's a question we got from people on YouTube. If someone has between $1,000 and $10,000 today to invest, they can spend on whatever they want.
Yeah.
And they had to turn it into $100,000 within 3 years.
Oh, okay.
What steps should they take? And obviously, this is not a guarantee. But if you're like, you have to turn this 1,000 into 100,000 or 10,000 to 100,000, what would you invest in right now, and how would you manage it over the next couple of years?
So I'm going to give you kind of a longer answer than maybe you were hoping for on this one.
Give it to me.
I'm going to start by telling you what you should not do.
Okay.
Because the first time I remember, I had $1,000 extra on my bank account. I was in high school. And what I did with that is I took the $1,000 and I went out and I bought a watch.
No, don't do that.
Yeah, and this watch was very studded up. It was all crystals, and I was like, ooh, it's a nice watch.
Clean.
So what happened with what happened with that watch? Well, I made that watch company richer. I made the jewelry store owner richer, and now that $1,000 watch today is worth maybe $50. Right? It was just a show. So my value of my investment dropped like a rock, but now these companies made money, which now they could take that and invest in more products, more inventory, more marketing, more whatever. So the first thing is you got to understand that you want to put it in something that's going to help make you more money. So I'll give you my personal experience, because I saw the biggest returns by investing in me, but that will be more of an active investment. And then you have the opportunity for a passive investment, which is why it's a longer answer than what you were probably hoping for, but I'll try to get to all the answers there. So I feel like everybody who, especially if you had the entrepreneurial mindset, you go through these phases where you first go through this like, I'm a hustler, side hustler phase, and then maybe you become like a solopreneur, and then you become an entrepreneur, and then you become a small business owner, and then you kind of go to that business owner route. So you kind of go through these phases, because initially, when I first started as a side hustler, I didn't know what entrepreneurship was. I was just trying to make some money.
Trying to make some cash on the side.
Exactly. You're just starting off. For me, I started off in the event planning space. So I was in college. I started hosting teen parties for other kids in college. And I didn't really have any money to spend. I was 17 years old when I started. So I was like making very not attractive deals to me, but it was the only way I could get started. Because what I did was I would go to venues to host a party, and I wanted a venue that wouldn't charge me any money up front. And in exchange, they would say, just give us 50% of every dollar that you earn. So if I made $1,000 in revenue from cover charge, right, $10 to come in, I give the venue, the club, whatever, $10 or $500. And then I didn't have money for a DJ.
Right.
So I said, look, DJ, I need someone to play music. Let's work out a deal. They took 50% of what I was left with.
Oh, man.
So I would give them, left for 500. They would take 250. Now, luckily, the business was able to grow where, we were making on the low end a couple grand a night. And then what was I able to? I was able to negotiate better deals. And then I was able to start investing my money into marketing. So I started taking some money. And I remember the first thing that we did was I started investing my money into flyers. It was $100 at the time to print 5,000 small flyers. And so I got creative, and I was like, look, before the event, we need to distribute all 5,000 flyers. We cannot have them in our possession anymore. And I can't do this myself. So I need salespeople, essentially. But I don't want to pay for salespeople.
Street team interns, college students. Yeah.
So what do? I'll give you VIP entry into the party, which doesn't cost me a penny.
Yeah.
And I will give you a shout out at the party. Doesn't cost me anything. Makes you feel cool, makes you feel exclusive. You get to walk past the line. You have this lanyard that says you're this, VIP, whatever. And so now I have people at some of the biggest colleges in my area passing out flyers, trying to get everybody to come because now you want to be one of those people. So, you know, I got these free salespeople that are trying to promote it.
Smart.
And so you have to be creative. And that now starts to multiply the money. And that's when I realized that I'm just a side hustler. I will never be able to build a business
Sure.
like this. I don't want to build a business like this because it was a very dirty industry, which is why I got out of it. I did not like the scene. So I left that and started kind of going down more the entrepreneurship route, not going more into innovation. So I started a sock company. So now I'm starting to invest money, my own dollars, into the sock company. That way now I can build a product, build inventory, build a website, build advertising, build marketing. And now I'm able to grow this much faster because now I have some skills that I learned from my mistakes because I screwed up a lot. My first event was a complete flop. I had some very bad failures. I had lost money on some occasions. It was, you know, when you deal with club owners, you're dealing with very interesting people and you learn very quickly, right? I'm a 17-year-old going up to some of these club owners trying to figure out the game and they're taking advantage of you. And it's also dangerous. I remember one time I went to a club to talk to the manager because we had a party the next week and I said, where's the manager? He said, oh, we got stabbed last night.
Oh, man.
And so, you know, you learn very quickly to protect yourself, to protect your own interests. I mean, you're literally, I mean, there was a lot of physical stuff that happened. I mean, I was the bouncer in a lot of it. So you learn to protect yourself physically, you learn to protect yourself mentally, you learn to protect yourself financially. So I had to learn very quickly. And so now I take the things that I learned. I'm in a much safer, much smoother, much cleaner industry, the sock industry, but I start to learn and I start to apply some of the same marketing. How can I be creative in the marketing? How can I get people to learn? And you know, you can't learn this in a textbook. You just have to try, be willing to fail. And so same thing there. Now I kind of go into the entrepreneurship route and now I'm starting to learn and I start to sell. And then I realize my passion isn't in socks. I like the socks, I like the business idea, but my passion isn't there. My passion is more on the financial side. So now I was also doing Minority Mindset as a hobby. Minority Mindset starts to grow. And then I start to build things like Market Briefs, which is our financial newsletter. So now I'm building Market Briefs and now I'm turning more into like from the entrepreneur to the small business side. Because in Market Briefs, I am not the only worker, right? On the Minority Mindset channel, it's my face, it's me talking. And it's, you know, we have video editors and all that, but it's mainly me. If I'm not working in Minority Mindset, we're not making any more content and it's not growing, which is okay, right? It's not for me like as my business. For me, it's my way of helping to pursue my passion and my mission to help spread this sort of financial education, the things that I was never taught.
Yeah.
But my business now, Market Briefs, we have a whole team, right? We have people that lead the creative side, that write the newsletter every day. We have the business development team. We have the operations people. So, you know, we have a full team that are doing it. And if I were to not go into work tomorrow, or if something were to happen to me, the business will continue without me.
Right.
And so, you know, it's a matter of flipping that money into the next thing, to the next, and being willing to invest the time, the education. So for me, it took me a solid decade. So I don't have a better, in 3 years, I couldn't figure out how to do it. You know, it took me a long time to figure it out. And
maybe you could do it now.
Now it's
turn 1,000 into 100,000.
I could do it in significantly faster than a year.
I think one of the things is that I'm hearing you say is, you know, invest that 1,000 into a skill. Invest it into a skill.
You will get the best return.
And put it into, you know, that could be, okay, I'm going to buy a camera and for the next 2 years master becoming great at using the camera, whether it be video or photography, and then start working with clients and making some side income and then using that money to reinvest in more equipment.
Exactly.
Using that money to maybe have someone else help me to scale my side business.
Yeah.
And then have that cash to invest in other things as well. It's like, and then develop new skills, and new skill and new skill.
And it takes that mindset though, and the willingness to take risk because, you know, I would also caution that because you have to be willing to just try. When I started Minority Mindset, I didn't have a camera. I didn't have any fancy equipment. I started recording videos off my phone. Yeah. And I was like, you know, I'm not going to invest so much money into this when I'm trying to, you know, it's a hobby for me.
Yeah. See where it goes.
See where it goes. And but I did take an acting class. I was in law school. So I was in law school part-time. I was working on my business full-time. And then I took an acting class in the evenings, night school, because I was like, I've never talked in front of a camera before. I'm not even a good public speaker. I don't know how to present myself. I don't even know how to hit the on button on a camera. How am I supposed to do this? So I took an acting class because I was like, well, I'm willing to learn. I'm willing to try. So you have to be willing to get uncomfortable and you have to be willing to take that risk. And this is I don't know if this is going to offend people or I'm going to say a bad word, but the reason why I think I've been able to become successful is because I'm stupid. My whole life, I've been told,
Me and you both, man.
I've been told, Jaspreet, you're stupid. Jaspreet, you're stupid. Why would you want to do that? And you know what? That's the reason why I am where I am today, is because I'm stupid. Because I'm willing to, I never looked at the risk. And you call it stupidity, but for me is I just saw the opportunity as I know I want to achieve something bigger, because I saw how hard my parents had it. I saw how hard my grandparents had it. My grandparents were refugees. They lost their homes. They lost everything. They had to fight for their lives. And so I saw the things that my family had to go through. My grandparents raised me. They lived with me. So I lived with my grandparents and my parents. So I heard their stories, talked about the struggles, and that was where I started to get my basis of financial education. Because my grandfather would tell me, and he actually repeated this to me a couple of weeks ago when I was on the phone with him. And he was like, you know, the biggest and worst disease is poorness. Because he said, I grew up and I saw extreme poverty. So my family's from a state in India called Punjab. And in 1947, our home, the state of Punjab, was severed by the government. And if you were a Sikh, a member of the religion that I am, and you're on the west side of Punjab, you had to migrate east, otherwise you were going to be killed. So my grandparents were on the west side, and you literally had to like run. Like my grandfather, all he had was a clothes on his back and a sword in his hand. And as they were coming across, they got attacked by a mob. And he saw his uncle get his head chopped open right in front of him.
No way.
They had to fight. And so he put his uncle on a horse, and that was the end. And
Holy cow.
He got to the new side of India now, and he's there. He lost his shoes on the way. He has no home, no money, no anything. And so he says, I saw extreme poorness. And when you're in that level of poorness, forget helping other people. You can't even feed yourself. How can you feed your family? If you can't feed your family, you can't feed another hungry person.
What would you say are the three biggest myths about money that you've debunked over your time of learning about money, that maybe you grew up thinking it was one way, like you were talking about loans and banks and all these different things? What are three myths about money that you've found out were not true?
Well, the first thing that I would say, I don't know if it's a myth, but I would say that the first thing everyone has to understand is what money is. And I don't mean in terms of like, in terms of wealth, but like money is just paper. It doesn't make you a good person. It doesn't make you a bad person. It's paper. And we talk about all these insecurities people have with money. I grew up being told, don't talk about money. Don't worry about money. Don't stress about money. Yet here I am seeing my parents work their butt off every single day. So
trying to make money.
And it doesn't make sense. How am I supposed to not worry about money? And you want me to become a doctor because you read those, if you go to those career fairs, they show you the different careers, right? And doctor is always number one, the highest income. So why am I doing this if it's because of the income instead of because I love it or do something that I love? Why not?
Or because I want to help people.
Yeah.
You want to save lives.
Exactly.
Yeah.
And what's crazy is if you understand money, you become financially educated, you're willing to talk about it. Well, now you can be financially stable doing whatever you want. And you can follow something you love and still be financially okay, because we assume that you have to have this in order to make money. You have to have this job in order to make good money. You have to have this career if you want to be financially stable. But that's a complete lie.
Yeah.
But that goes down to not us being willing to talk about money. And I talked about this in our last interview. But money is one part of our lives. And the reason why people are scared to talk about it is because we're insecure about it. And that's because we don't understand how money plays a part in our lives. It's one aspect. I say that there's four. You have to be physically healthy, mentally healthy, spiritually healthy, and then financially healthy. If you're not financially healthy, well, it can make everything else much more miserable because you can't pay your bills. But if you're financially healthy, you're rich, but you have nothing else, more money just makes you more miserable. So you need to live a holistic life and understand how money plays a part in your life. That way, the finances can have the biggest power. And then you understand that more money just amplifies who you are. It's like fire. It's like fuel. It fuels your fire. If you're a good person and you have more money, you have a tool to do more good. If you're a bad person, you have more money, you have a tool to do more bad. Yeah. Just why we need more good people with money.
Exactly.
How do we do that?
Well, yeah,
get educated.
A lot of people just say that money exposes who you really are.
Exactly.
It amplifies who you are. Right. So people can see, whether you're that good person or a bad person or whatever it might be in between. But first off, understanding what money is what you had to learn. It's kind of like this thing. What else around understanding it would you say?
So
maybe you thought it was one thing, but then you realized it was something else.
Exactly. So now that's money. The second thing is, how do you use money and value money? Because I'm gonna say this in the nicest way possible, but traditionally Indian people can be very cheap. Okay? And I grew up seeing this. And what does that mean? It means that the traditional Indian house is a save-heavy culture. And I can say that because I've seen this and I grew up in that, where you make $1 to spend 20 cents. And the traditional American culture is you make $1 to spend $2, right? And so it's a save-heavy culture. So you're spending as little money as possible to save it. Now, obviously we talked about inflation, so I'm not going to mention what that means with savings. But what I'm talking about here is you can use your money as a tool. And this is what wealthy people do, because now what do they do with their money? You use your money to buy your time back. Because what so many of us do is we're exchanging our hours for dollars. You go to work every single day and you get paid, but what are wealthy people doing? They're not working just to use their money as a way to buy hours. They're using the money to buy their time back.
Yes.
Because now you can build things and build processes and invest your money, because now you can use your money as a tool instead of as a fool. Yeah. That's what I like to say. But this is where it's how do you now use your money to make your life better?
Yeah.
And you don't want to be now just buying a whole bunch of Gucci and Louis Vuitton. It's now actually improving your life. And
not to make your life look better, but to actually improve it from the inside out.
Yeah. So the simplest example would be you start a YouTube channel. We talked about buying a camera. Well, one thing that you could do is you can hire a video editor. You go on a freelance site, hire a freelance video editor, and now what are you doing? You can spend more time making more videos instead of spending all of your time editing the content. So you can focus on your time. You can hire someone to mow the lawn. You bought your time back. You can hire somebody to help get you your groceries. You buy your time back. It costs money. You have to spend money in order to do that. But you're getting something in an exchange. And now you're buying your time back, so you can use your money as a tool. And you can use your money as a tool to buy your time back, or you can use your money as a tool to make you and attract you more money. That's what wealthy people do. And so you want to be able to use money in that way. The third thing would be now to really, I know I talk about this a lot, but you have to understand the difference between something that makes you money and something that loses you money.
And that's a liability, yeah.
A liability. And
what are the main liabilities that people spend on today?
The way you look, man. We have this Instagram flex culture, right? And it is very toxic if you do not know how to use it.
And unless you're investing your money wisely and you've got excess money and you're like, okay, I want to buy some stuff to flex, cool. But
if
you're not investing your money,
yeah,
and you're just spending it on clothes and watches and shoes,
if you
look good,
if you got the name brand stuff, but you got no savings, you got no investments, you're doing something wrong. Your priorities are in the wrong place. What are you doing? You're making Gucci rich. You're making Louis Vuitton rich. You're making all these companies rich, but you're keeping yourself broke. When I talked about my watch, I spent $1,000 on a watch. I had no investments. I didn't even know what an investment was at the time. I didn't realize I could have taken that $1,000 and invested it into a watch company and get a share of the profits. But that's what wealthy people are doing, and they understand that. And there's nothing wrong with spending money. There's nothing wrong with having luxuries. There's nothing wrong with having the nice things.
Yes.
But it's a matter of when can you actually afford it. You have to know when the right time is for you to have it, because you want to first make yourself rich, and then, if you can afford it, do whatever you want.
Grant Cardone was always talking about how he doesn't spend money on the cash he makes to buy watches or things. He only spends money on the watches and clothes and things on the passive income.
That's great.
From his investments.
You take the earned income, you're working every single day. You take this income and you use as much of that as possible to invest into assets. The assets pay you, live off of the assets, because now those assets don't need you to go to work every single day to get paid. So if you break your leg and you can't get paid, you're not getting that earned income, but that the passive income from your assets still coming in. And now if that's the money you're living off of, you are free. Your earned income is just buying you more assets. And so how do you start that, right? And so this is where you have to kind of build some sort of system for yourself. And the rule that I would always say is follow something like my rule of 5. If you can't buy 5 of them, you can't afford one of them.
Yeah.
So it's, you want to buy a $1,000 phone, you want to buy a $1,000 watch. Okay, fine. Can you buy 5 of them? And if you don't have the ability to buy 5 of them, if you can't afford to do that, then you can't afford one. If you can't buy 5, you can't afford one. And then you want to create a system, like a system that automates your finances, where now you have something going on with your money that is putting your money to work no matter what. And so one of the easiest things, you can create your own, is to follow something like a 75-15-10 plan, which means that for every dollar you earn from now on, 75 cents is the maximum you can spend. 15 cents is the minimum you're investing, and 10 cents is the minimum that you're saving. Now, the savings is, you want to build somewhere between 3 and 12 months worth of savings if you want to have that protection. 3 months if you don't have a lot of liability, a lot of responsibilities, you don't have all that going on, and you have a high risk tolerance. 12 months if you want to play it safe. You figure out what's right for you. After you filled your savings, you fill up the savings. You don't want to put any more money into it because now you're just being eaten away by inflation.
Yes.
Right? The savings is not there to make you wealthy. It's there just to protect you against an emergency. Then what you do is you take the money, you put it into your investments. And now you just keep investing money. Now what happens is as you grow your income, you don't change this ratio. So if you go from $40,000 a year to $400,000 a year, you keep the same ratio and you're still investing first. And then you keep saving your money, and then you know how much you can spend. Because now what you're doing, which is what wealthy people do, is you invest before you spend. The way that the finances look for the majority of people is you make money, you pay taxes, you spend your money, and then you wonder where your money went. Well, wealthy people do, right? Wealthy people are, you make money.
Especially in California.
Yeah, it's $7 gas and high taxes. But what wealthy people are doing is you make money, and then depending on how you make it, either you pay taxes first or after, ideally after, because there are ways to do that legally, but you make money and then you want to invest as much as possible and then you spend whatever's left. So wealthy people invest and spend what's left, while the majority of people spend and invest whatever's left.
Here's one that I think a lot of people do, and I think it hurts them in a big way. How does someone not make their net worth attached to their self-worth?
That's a good one.
Meaning, how do they believe in themselves, have confidence, have love for themselves when they're not making that much? Maybe they're in a transition. Maybe they lost their job. Maybe they're just starting out.
Sure.
And how do they also, when they start making some cash, not tie their bank account number to their self-worth?
So when you fail at something, you don't become a failure as a person. You failed at a task. And in order to become successful at something, you have to fail at a lot of tasks. And so the first thing you have to understand that about yourself is that just because something didn't work, just because you failed at something does not mean that you are a failure. Maybe you failed at a task. I failed at a ton of things. I'm sure you have to. You have to screw up a lot. And that's how you find the good. So now when it comes to net worth, if you want to be completely honest, your net worth is pretty useless. It's a worthless number. It means nothing. It means less than nothing, because what is net worth? It's a paper number. If I have $1 million net worth in the stock market today, tomorrow it could be worth 400,000. It doesn't, if you are valuing your life, and even worse, if you are spending based off of your net worth, you're living a very dangerous life. And some people do this because they say, oh, I'm worth $1 million. So I'm going to go out and live $1 million lifestyle. You don't have $1 million. You're just worth $1 million. You don't have income coming in. You're just worth this amount of money, and so you go and borrow a ton of money and you start living this $1 million lifestyle, and then things go down and now you're the first one to lose your shirt. So the thing that I want you to remember is first, regarding the failure, you're not a failure. If you have a product or service that makes you $10 per sale, you would have to sell 1,000 of these a month. If you make $100 per sale, you're gonna have to sell 100 of these a month. And if you can make $1,000 from each product sale or service sale that you make, you would have to sell 10 of these a month.